In episode 262, we talk about where to stash that down payment cash. Stick around. Welcome to the Mullooly Asset Show. I'm your host, Tom Mullooly, and this is episode number 262. Thanks for tuning in. So where do you stash all that down payment cash that you've been socking away? If you didn't buy a house yet, you're probably aware that home prices have exploded in your neighborhood, in our neighborhood. It seems everywhere home prices are going in just one direction. They're going up, and I mean a lot higher than I think a lot of people expected. But what if you've been involved in these bidding wars? You know, the price goes beyond the listed sale price. You're involved in these bidding wars. We know of some folks who have been involved in 12, 15. We know one group in particular that's been involved in 20 different bidding wars, and they've lost. What do you do with all of that cash? You know, you've got cash that's been basically stockpiled for this down payment. Where should that money go until you're going to need it? And here's the thing, you're going to need it immediately. So it's gotta be in something liquid. So you can't wait for CDs to mature. You can't wait for a bond to come due. Even if you have your money in the market, you still have to sell your stocks, sell your mutual funds, or sell your ETFs. It's still gonna take a little bit of time for you to actually get your hands on the money. Now, there are some folks we've had conversations with who say, I just can't stomach the idea that my money is going to be sitting in a bank earning nothing. To those folks, I say this, please understand that you cannot afford to have that principal at risk in this kind of situation. It's so important. You don't want to be bidding on a home where you're going to live and still have to worry about what the stock market is doing that day or that week. There was an article in the Wall Street Journal recently, we'll link to it in the show notes, several thoughts from advisors, some of whom we're pretty friendly with, that had different ideas on what to do with the cash. Some of them were saying just leave it in cash. Some people were saying invest it. Other people were saying, hey, it's okay to have this money at risk. To those folks, we say, no, that's not how we would do it. So, of course, the comment section of the Wall Street Journal article are what you should really zoom in on because the comments are hilarious. And there was even a guy in there who recommended a particular preferred stock. What are you talking about? Like, that's just reckless. So look, money that's earmarked for buying a home should be in something that's super liquid and relatively safe. And hopefully in a separate account, you know, not in your Robinhood day trading account, not in your regular brokerage account. It should be a segregated account away from any temptation that you may have. So if stock markets and drop, if the stock market drops, and you know, a lot of times when stock markets drop, real estate drops too, you want to be in a position to do something with this down payment money. It would be a real shame to see your down payment money going down the drain in the stock market just when you need it most. That's so important. And so we really stress to clients when they tell us that they've got a particular cash need that's going to be coming up. They're buying a car. They're using this money for a down payment on a house. We want that out of 100% risk. We want it to something that's going to be very liquid and relatively safe. That's the message for episode 262. Thanks again for tuning in.